So when Apple announced its big new AI strategy, plugging third-party models into Siri, the reaction was, well, it was almost like people felt sorry for them. The story was immediately, Apple's late, Apple's behind. They're playing catch-up in the AI arms race. But from where I'm sitting as a business analyst, that's not the story at all. This isn't about being late. This is a masterclass in defending a profit fortress, and I'm going to show you exactly how.
So let's get this straight right from the start. We have to stop looking at this as just a tech feature. It's not about making Siri a little smarter. This is a fundamental and, I think, pretty brilliant move to control the entire profit mechanism of the AI world. Apple is trying to redefine who gets paid, and more importantly, how they get paid.
The rest of the tech world, they're all obsessed with this one race. Who can build the biggest, most powerful AI model? It's all about parameter counts and who wins on the latest benchmark test. But Apple, they seem to be running a completely different race. It's not about having the fastest car, it's about owning the entire racetrack. To put it bluntly, I think Apple looked at the field and decided, you know what, we're not going to win the best model race, and maybe we shouldn't even try. Instead, they're using the one thing nobody else has, their massive, loyal user base. They're positioning themselves to be the ultimate gatekeeper, the one toll booth that every single AI model has to go through to get to almost 2 billion active devices. Okay, so before we go any deeper into my theory, let's be fair. We need to understand why the market thinks Apple is on its back foot here. The conventional wisdom isn't coming out of nowhere. It's actually based on some pretty compelling data. I mean, just look at this slide. The numbers are pretty stark, right? When it comes to capital expenditure on AI, Apple is getting outspent 5-to-1 by giants like Microsoft and Google. If you think of this as a brute force arms race, well, the player with the smallest budget is losing by definition. This right here is the foundation of that Apple is behind argument. And that spending gap, it feeds a really simple story. Apple just can't build a world-class large AI model on its own, so it has to bring in outsiders. That's viewed as a weakness, like they've lost their technological edge. But this whole argument is built on one single massive assumption, that in the world of AI, the company with the best model automatically makes the most money. And my analysis suggests that assumption might be completely wrong. So this brings us to what I believe is Apple's real strategy. Instead of pouring all their cash into building the fastest engine, they're building the toll booth. They're focusing on owning the single most valuable piece of real estate in the digital world, the default user entry point. So how does this toll booth work? Well, we can call it a task orchestrator. Here's the idea. When you ask Siri a question, its job isn't just to try and answer it. Its job is to be a smart dispatcher. It analyzes your request and decides, okay, is this a simple task my on-device AI can handle, or does this need the heavyweight power of a big model from one of our partners? Apple gets to make that choice every single time. And this is how they capture the value. It's so simple, it's brilliant. You, the user, make a request through Siri, the system you already use and trust. Apple's orchestration layer routes that request to the best provider, whether it's OpenAI or Google or someone else. That provider delivers the answer, and in exchange for that valuable customer lead, Apple takes a cut. It just slides right into the middle as the essential intermediary. Now, if this strategy sounds a little familiar, well, it should. This isn't some brand new radical idea. It's Apple dusting off and redeploying one of its most successful and profitable business models ever. They're literally just pulling a page from their own playbook.
Just look at the parallel here. It's almost perfect. For years, Google has paid a fortune to be the default search engine in Safari. Apple doesn't run a search engine. They just control the browser, the entry point. Now, just swap the words. Instead of Google Search, you have third-party AI. And instead of Safari, you have Siri. It's the exact same business model. Control the front door, integrate the best service, and collect a toll.
And the power of this model? It's just staggering. The estimates are that Google pays Apple around $20 billion a year. That's pure, high-margin profit for basically just owning the default setting on a screen. That is the kind of prize that Apple is chasing all over again in this new AI era. Okay, so putting on my value investor hat, this is where the strategy becomes truly compelling. This is all about building a defensive moat around your profits in a really capital-efficient way, especially when everyone else is spending like crazy. This table really lays it all out. The AI arms race, that requires massive, massive capital spending for a payoff that's still pretty uncertain. But Apple's toll booth strategy, it's capital light. They can let everyone else burn billions in cash trying to one-up each other's models, while Apple just focuses on what it's always been great at, user experience, and seamless integration. The goal isn't some future monopoly, it's about defending their incredibly high return on invested capital right here, right now. To put it simply, Apple gets to give its users state-of-the-art AI features without having to shoulder the titanic costs of R&D and building out all that infrastructure. And this directly protects and grows what is arguably their most important business for the future, that high-margin services segment. That's the part of the business that really justifies its premium stock price.
But, and this is a really big but, this strategy is not a guaranteed win. It's not without some very significant risks. So for this analysis to be complete, we have to talk about the real hurdles that can make this whole toll booth strategy crumble.
I see three main threats. First, just basic execution risk. If using Siri as the middleman is slow or clunky or just not very smart, you and I are just going to bypass it and go straight to the ChatGPT app. That makes the toll booth worthless. Second, you have partner revolt. These AI companies spending billions on their tech might not want to be treated like a commoditized backend and pay the Apple tax forever. And third, there's the insider problem. If one partner, like Google, seems to get special treatment, it could destroy the neutrality of the platform and scare everyone else away. At the end of the day, it all comes down to this one simple question. Apple is making a huge bet that its integration is going to be so smooth, so convenient, that we, the users, won't even think about going anywhere else. They're betting that we'll happily pay an invisible toll for a simple, elegant experience. The multi-trillion-dollar question is, are they right? And just as a final note, everything we've talked about today has been my own personal analysis of business strategy. This is not in any way investment advice. Please always do your own independent research before you make any financial decisions.